Welcome to Capital Conversations, where innovation meets opportunity. Join hosts Karen Rands and Erik Nelson as they unpack the realities of raising capital, from angel investing to IPOs, and reveal what it takes for companies and investors to thrive in today's changing markets. Let's get started.
Hey, welcome to the Capital Conversations, our first episode, Erik. This is phenomenal.
Yeah, it is. It's very, very exciting to get our first podcast off the ground and our first live stream.
Yeah. So, Erik, I think it's so exciting that we're kicking this off. We've known each other for, what was it? It's probably been
20 years almost.
At least 20 years. I would say
Yeah.
almost 25 years. We go back to the early days of when I was running my angel investor group when we first kind of connected. We have been circling each other, trying to do business together for the longest time. And, all the way back to when we were, then and still today, trying to figure out the best way to help companies get access to capital and to engage in the capital community when we were exploring, do we partner up with a broker dealer? How do we do all this kind of stuff? And just the laws are just really not very friendly back then for helping companies raise capital. But, it's changed, and we'll be talking about that. But we moved on, and we'll both be sharing more about our expertise in a few minutes. But, when we reconnected, I guess a year and a half ago or something
about
like
a year and a
that.
half, 2 years ago, at a Christmas party for the Thai Angel Group.
Yeah, exactly. And we both have such a sense of desire. Really, I think deep down we both want to help innovation get funding, companies, that are doing all the right things to be able to get capital and scale, and the investors that invest in them to find a way to create liquidity, to create wealth. Because when you create wealth, then it gets spread around and you fuel the economy and all that kind of stuff, right? And so this is going to be, I think, when we were like what we've been doing the last year is really trying to break through. How do we communicate about Reg A Plus as a platform to raising capital, and really to helping, melding it with all the other strategies and helping with what I call the middling companies, that whole scenario of 10 companies, and you got 3 that don't do well, and 1 that hits it out of the park, and 3 that do really good, and 3 that are just sort of in the middle, kind of flat, growing along. And, we all know there's got every angel investor out there listening right now, or angel network manager, and even the venture capitalists, they all know those middling companies. And you and I are of the opinion that there are ways for them to jump to their next life cycle and get back on track to create positive liquidity, return on investment for investors. So, so let's talk about why we're doing this show. Like, what was it that spurred us to go, hey, we need to do this?
Well, I mean, one of the big things is that a lot of people don't understand is that the capital markets are very connected. That it's not just about, does your company qualify for an IPO or should it go public, but how you raise money prior to that point matters, and what the life cycle of raising capital is, who's participating in the market, whether it's individual investors, angel investors, whether you're doing a crowdfunding, and how this all ultimately ties together. And I think those are very important things that are not really well discussed out there, and things that, with our shared experience, that we touch on pretty actively. I've got over 36 years in the capital markets. It's what I've been doing since I got out of college. And, I've worked on almost every part of the markets for the smaller company.
Yeah. I guess for the last year, it seemed like every time that we were having our weekly calls, we would share these war stories, things we had experienced that past week, where it was, in my case, raising capital, all the different direct public offerings. In your case, it was these companies going public and staying public, and the changes in the rules that they were making, all the changes in the legislatures and regulatory rules. And, it just was, became really clear that so many entrepreneurs and investors just don't know what they don't know. It's a dynamic space where it changes. And, it's hard to keep up with it if you're not in it. And so, as we're going to get into here in a little bit when we talk about the purpose of the capital markets, who you have advising you, it's really important to make sure because sometimes they make the mistake. So, we had this aha moment that says, let's just talk about what we know, let's be a couple of hacks talking shop
Yeah, I
and,
mean,
it's going to be on the edge. Hey, everybody, it's going to be on the edge of your seat and excitement talking about this stuff. I promise. But, at least for us, it will be. So,
yeah, I mean, there's a lot of things once you go public that, just because you're a great business manager and just because you're really good at running a set of operations, understanding the complexities of the capital markets or the public company filing requirements, those are things that can trip you up. And having good
yeah.
advisors and, on the accounting, the legal, and the other side who've been through the process really can make or break your chances of successfully raising capital.
Yeah, yeah. We're going to dig in deeper to all those different players here in just a few minutes. But let's talk about, since this is our first show, let's talk about our purpose. I mean, we kind of talked about the history of how we got here, but, the purpose of this show is really to demystify the art of fundraising for privately held and publicly traded companies. And we want to encourage everybody that's listening now and the people that listen to the replays of this to make a plan to join us every Tuesday. Right now we're doing 11:30. That may change, but you'll know. It'll be on the same bat channel. Eric's wall will be where we do the initial live stream. We're going to get it out there at some point, soon. So you can watch it on YouTube Live or you can watch it on Spotify Live. And that's where the replays will be available. And we'll explore strategies for raising capital, preparing for an initial public offering, better known as IPOs, and equipping investors with the tools to evaluate the growth potential of those companies. And each month we'll cover a core topic. Each episode will have an option for you, our listeners, to answer the questions. You'll be able to submit questions. Now, I hope if you're getting questions right now, if you're thinking about stuff, and as we talk, go ahead and drop them into the chat or into the comments or wherever you're listening, and we'll try to identify them when we get to a break a little bit on, and we'll address those questions. And each month, one of the things, Eric, you've been telling me since you announced that we were going to be doing this show, so many people, you have such deep relationships in the microcap space, in the OTC market space, in all of these things, these specialists that we're going to talk about here, in the different players that are in the space that want to be on this show. So every month we're going to have an industry expert or a business owner that's gone through whatever that topic is that month to share their own insights and real world experiences, empowering you as a listener to navigate the funding landscape with confidence. And then, yeah, what I think and I'm really excited about, because, one of the best fun things that hosts do is when they just sort of like wing it, right? They just sort of like talking about whatever the hot topics, what's in the news. And it's always something in the news, whether it's the stock market or private capitals or regulations, or even like one of the things I heard the other day, I didn't even know that some states are looking at creating their own exchanges. So this idea that we'll get into in a minute about cross listing and part of, future episodes. So I think it's going to be really fun when we get into some of those lively conversations. So, and also make sure for those listeners, go out there. I'm going to put it into the chat, but subscribe to our Capital Conversations newsletter on LinkedIn, because you'll get that information. If you miss an episode, you'll hear about the topic and you'll be able to go directly to the replay of that when those episodes go live. So, Eric, let's dig a little bit further into our introductions on ourselves, because if people aren't that familiar with us, they may not realize, our 20, 30 years of experience, each of us have in our specialization. So, particularly when it comes into, we're getting ready to talk about the purpose of the capital market. So you're president of Sterling Holdings and Investments.
Yep.
And the subsidiaries of Coral Capital Advisors, Mountain Share Transfer, which is issue servicers. Share with how did that evolve? I mean, were they all part of your from the very for 36 years, or did you see an opportunity at one point and started another company, and then perhaps how they integrate with each other to solve the problems for our listeners.
Sure, I love the opportunity. So, as mentioned, I've been in the capital markets for 36 years. I started out of college as a retail stockbroker. I worked for a variety of smaller firms throughout my initial work experience. Opened up a small fund, ran that for a couple years, but just couldn't achieve the size I needed. And during that period of time, I started with a partner, Coral Capital Advisors. Originally, we were called Coral Capital Partners, but our focus over the 30 plus years it's been in existence has been to really bring advisory services to small companies that are either publicly traded or looking to go public. And during that 30-year history, we've consulted on pretty much every aspect of the capital markets as the markets have evolved, as there's been regulatory changes that have increased the activity in one section and sometimes decreased it in others. We've had to evolve with the change in rules and regulations. And then in 2012, I had an opportunity to acquire Mountain Share Transfer. So Mountain Share Transfer was available from the prior owners. They were deciding to move on with their lives, and so I kind of picked it up as a turnaround project. So for just over a dozen years now, we've rebuilt Mountain Share Transfer, built up its client base. It's a SEC registered full service stock transfer agency. And what that is we maintain shareholder records. We keep track of a company's shareholder records and we process transfers either among individual shareholders or help them deposit or withdraw shares from their brokerage accounts, where they're held in street name. And then several years ago, we started building out a issuer services division to provide other services outside the transfer agency space that impacted corporations and their shareholders. Proxies, shareholder meetings. We recently had added medallion signature guarantee stamps about a year ago. For those who are not familiar, that is a stamp that authenticates a signature so you can actually transfer your shares, your securities, your stocks, and your bonds. And for those that are familiar, they've gotten exceptionally hard to find lately as a lot of banks have pulled back from that business. So we've kind of created over the years, underneath Sterling Holdings, a one-stop shop for corporations and their shareholders, being able to provide them companies from we're raising capital and we want to get bigger to we're already public and we need additional services. And, where can we go to try and have as few vendors as possible or few providers as possible? But what that has done is that has allowed us to gain a lot of insight to all areas of the capital markets. We've pretty much worked on and seen most things that are going to commonly be occurred. And then 5 or 6 years ago, I started a small fund, again, where we clean up corporations and help companies go public. And on our first 2 investments out of the fund, they both uplisted to NASDAQ, one through a secondary offering.
Yeah.
And one was on the over-the-counter market, and it received a unsolicited offer, buyout offer from a SPAC, and actually completed a second reverse merger with a SPAC corporation to become listed on the NASDAQ. So I kind of had the privilege of ringing the opening bell and the closing bell about 7 weeks apart in the fall of 2022 up at the in New York at the NASDAQ market. It was quite the experience.
And
then
you know what, Eric? I think that when that second one came through and you didn't have you didn't have really anything you had to do with your filings with the SEC because it was so good. They were like, yeah, sure. You know what I mean? I was like minor stuff you had to respond with. That was like, I said, that was part of that aha moment. I said, the fact that you know how to do that, and it is so hard for other people to do the same, you have a special expertise and knowledge that has to be shared out there into the public, in this form where people can just hear you talk about it in real life experiences like that. So I know that is going to be the things that you're going to bring to the table as we have these topics, and those experiences are going to be so valuable to our listeners.
Yeah, I'm rather proud to say on that second project, when they received that unsolicited buyout offer, if the structure of the corporation that I helped put together had not been so clean and well organized, that offer probably would have never came through. So that was quite the compliment to be part of that.
Yeah,
And then
absolutely.
we're working on a couple more projects, and I hope to have an announcement at some point on our third one that we can share within the next few weeks. That'll be
All right.
make us 3 for 3. But the capital markets are changing, and there's a lot of new rules and regulations coming out, and that's one of the things we're going to get involved with and talk about the importance of what Karen's been working on for the last 20 years or since the Jobs Act came out. So, Karen, if you're the president of Cougaran Capital Holdings and host of the Compassionate Capitalist Show, and former head of the Network of Business and Angel Investors, how I first met you. You had one of the best angel groups that I've ever attended. The quality of the companies that you were able to bring through and prepare for presentation is virtually unparalleled. You did an excellent job at that. So why don't you share with our listeners of how this all came to be, and also, didn't you tell me you started out at IBM at one point?
Yeah. Yeah. So quickly, I was at IBM, multiple different hats, all different kind of technology and sales jobs and product launches and things like that. And then my last job, right at the beginning, or sort of like, I guess actually might have been what ultimately became the tip of the bubble of the .com. I had been brought in to help cultivate a team of reps to respond to the new .coms, the back then they were, client server solutions that were, ultimately became cloud solutions, and all of that stuff. And my job was to prepare those companies, validate their technology with the IBM resources we had, so they could go out and get capital and then come back and spend it with IBM, because they would get the venture capital, and because we helped them, they would spend it, because IBM had realized they had missed out on some of the big boys like eBay's and Amazon. And once you're on a standard of a platform, it's really hard to get companies to move off of that technology. And so what was interesting, I had a client that I'd been working with that I love the innovation that they had. And I said, this is, got to get out there. I want to be in that parade and not watch that parade go by. And it turned out that parade was sort of like if you remember the movie, Animal House, and the
Yeah.
parade that goes down the dead end alley, and they're all bumping into the brick wall. Well, the brick wall was the .com bubble, and I left IBM right in January of that year, in my own bubble, not even realizing there was a .com bubble happening. But the big thing that happened that was a pivotal change in my life was, a few months after I left, I was invited into this angel investor event. And I went to see if this company that I had joined to help them raise capital was suitable for them. And I also, my cousin had started being like a bird dog for a VC, and what kind of companies were here that he might be interested in. And so I walked into this room, and this is now part of my story, because I didn't really understand it until really about 2 years ago, that I had never heard the term angel investing until I walked into that room. I mean, I heard it when they go, "Hey, come to this angel investing meeting," but I didn't really know what that meant, right? I didn't know that it was really the capital gap between a company getting started and before they can qualify for venture capital or bank finance, for the most part, as a startup. They were the ones, and these were people writing checks out of their own checking account. But the big thing is that they really were, I felt like, the people that were setting the course and direction of what innovation was going to get funded and come to market. Because if those companies didn't get past that very narrow threshold of that group of angel investors liking them and wanting them and to fuel them to get to the next level, it was really, really hard for them to be able to go other places to raise capital. And even within our own group, I came to understand that 8 companies might come through the screening process, 4 might get approved. There's always an element of, they got to have the quality and the ability to actually do something with the money and succeed, because that's the risk reward. But they also had to have an entertainment value. They had to be good at delivering a presentation. So when if you got 8 that could make money, but you pick 4 that are going to be the best, most interesting presentations, doesn't mean those other 4 aren't good. It just means that they didn't have what it took for that group. And then likewise, within the 4 that got approved, odds are only one of them was going to get money. So that second one might get some money, but one of them was going to get the main money. But that doesn't mean the other 2 weren't good. It's just what the capacity of that group is to do. And that's a big part of what I'm not going to get into it now because we're running out of time. We want to, keep this short and sweet. But it is such a huge part of why I do now, why I wrote the book, Inside Secrets to Angel Investing, why I have the Compassionate Capitalist Show, is really to create awareness out there in the marketplace that this is an asset class that people can invest in and create for profound wealth. And the whole history of why the Jobs Act did was that our government finally figured out that we shouldn't be limiting people's ability to invest in the entrepreneurs that they love and care for, that they're willing to buy a product that's unproven from, but not allowed to invest in them. And so now, now we have laws that allow all of that, but awareness is so still small. We have probably, of all the companies raising capital, and I did the math for Atlanta, but we may come back to it at near the end. But we're probably maybe 10% of the potential investors that qualify as accredited investors are actually investors investing in entrepreneurs. So that's a big gap, and of the companies raising capital, probably the amount of companies raising capital in the United States and the amount of investors that are available as angel investors or crowdfunding investors is maybe only 2% of all the companies that are out there going through incubators and accelerators, of like the amount of people to the amount of companies. So I'm saying 90% of the companies that are supposedly qualified, they're getting training, they're either paying for it, or there's funds that are being put towards incubators and accelerators. They will not have the ability to raise capital, in traditional means, unless we bring more investors to the marketplace. So that's kind of part of what we're trying to do is demystify this so more people understand millionaires have chosen to invest this way for 80 years before it was available to everybody else. And so this is broad, very exciting times that we're on. But let's jump into talking about, and putting the playing field, the foundation for where we're going to go with this, with the rest of our topic today. And we'll talk about what we're going to talk about in the future episodes, right? So part of it is the private capital markets, right? That's part of our whole thing, right? Is to the first piece of the markets are the primary, right? That's what we have, the primary and secondary, right? Primary market is capital raise. So there's your traditional Reg D, which is a way it had been done since the securities laws were passed in the 1933. And I'm going to drop some lingo here. Seed round, Series A. One of the things I hope we get into in the future is what is a definition of a startup, because I can tell you right now, East, West Coast, West Coast have 2 different definitions of the way that they describe a startup. And I don't want to say that it's like the rap wars, but, not really. But, it's interesting. So one of the things that our audience will learn is that you've got to put context into where the milestones of that company is to decide for your own benefit, and in the context of how somebody else might be talking about them, are they actually a startup? And we'll dig into that in the future. And we're going to get into this evolution, the whole part of what I talked about, the angel investor and the lack of what they're happening. I want to come back to it. We have time to talk about Atlanta as an example, because I think a lot of listeners would go, wow, I never thought of it that way, Karen. And so sit on your edge of the seats to the end. We'll see if there's somebody actually brings up a question. What do you mean by that, Karen? We'll get into that and why that is, and the laws and stuff like that. But Erik, I want to give you time to talk about the secondary markets, because that's such if the primaries are about raising capital, secondaries are about creating the liquidity. So introduce to our audience, the secondary markets, about liquidity and price discovery, and then we'll get into these participants in the capital markets.
Yeah, Karen, I mean, the secondary markets are what we think of for the stock market. When you think of the New York Stock Exchange, the NASDAQ, the old American Stock Exchange, and then the over-the-counter market, those are really secondary markets. And their primary purposes are to create liquidity for investors to help develop a active trading market for the shares of the companies and the other securities, whether they're limited partnerships, bonds, or LLC units that trade on those exchanges or the marketplaces. But the other thing that they do that people don't actually think about a whole lot is they create price discovery. And price discovery, while it sounds like it's an overly complicated definition, it's really what price does it actively trade? Is a over-the-counter stock that trades at $10 or is priced at $10 but never trades there? Is that really the value or the price of the company? Or if that same company trades like crazy at $5, is $5 actually the real value of the company? And those are things that we're gonna talk about is the importance of price discovery for raising capital, because investors do like to raise capital where they think they can get some liquidity or where they think the liquidity will be. We also
Oh
want to
yeah.
talk. I mean, it's every smart investor really should have an idea how they're going to get their money back before they write the check to invest to begin with.
Oh
Um,
yeah. I gotta tell you. Let me just interject here because I remember one of the companies that I was in love with when I was first running that angel investor group, and there was one of our prolific investors. Really, I mentored under him. He taught me so much about that, and he could do in his head. He was like, this company really had novel technology, and would really change a whole aspect of our medical healthcare arena. But their valuation was so high, he said, there's really no way for me. I'm going to pass on that. I love it. He had an executive of a company that was going to come in and like strike a $3 million check to put into this thing because he was in that space and understood and was looking for like a place to go and be active in. Get leaving the regular traditional public company market and getting into a private opportunity. And he said, "There's no way I can make my money back on that. Their valuation is so high." And I started using this method too. I'm going to have it has to be think about where they have to be 5 years from now and their value at 5 to 10x that number to get the sale price or the public price. And, there's just no way that they're going to be able to do that. I was like, wow, I had I never really thought of it that way. It was such an aha moment. And I see it all the time now when companies, and when we get into talking about the participants, one of the worst things for companies to do is to turn to an attorney to give them a valuation. Attorneys cannot do valuations on these kind of things. So, okay, go ahead. Let's get start talking about that kind of stuff because it really does. And that's the whole unicorn. We're probably going to do a whole episode on the myth of unicorns.
well, I mean,
you know?
I will tell you, I remember back during the dot-com era, there was a venture capitalist who made the cover of Business Week for his exits. But it wasn't a good idea to buy his exits because you were buying what he was selling. You weren't
Uh-huh. Yeah.
buying when he was
Yeah.
buying. So for those investors who thought they'd do well by buying what he was selling, they just bought high and got
Yeah,
burned.
they bought it's the difference. Wholesale retail, right? It's
Yeah,
such a
you
simple
got to know
concept.
what you're doing. It's also important. If you're looking to raise money, and you want to, or to invest, have an idea of how you're going to get your liquidity back, how your investors are going to see the exit, and if you can successfully get your investors exits, you're more likely to raise more money as you need to grow your business.
Yeah, yeah, exactly. All too often, I think entrepreneurs, they're so concerned about their control. They don't think about, and even investors, angel investors fall into this trap too about percentages off. It's not how much percentage you own, it's the value of what you bought and what you think you can sell it for. Doesn't matter if you have 10% or 1%, you know what I mean? It's a thousand shares, 100,000 shares, whatever that number is. If you bought them at $1 and you can sell it at $10, you made money. Doesn't matter what percentage is, it's the number of shares, what you bought them for, and where they're going to go, right?
Yeah, I mean and price is ultimately determined by supply and demand.
Yeah, yeah, yeah.
I mean
Yeah,
that's the ultimate determination of price.
yeah.
But it's also as we move forward, it's important to understand. who participates in the secondary markets and the roles they play.
Yes,
Inve-
yes. Let's jump
inve-
into investment bankers because that's always like a lot of people call themselves investment bankers and they're not really investment bankers. Whereas there's actually a license for investment bankers now, right?
That's correct. If you are a licensed investment banker, then you work for a broker dealer that is a member of FINRA. It is the Financial Industry National Regulatory Association, but it regulates all broker dealers in the country, and you have to have your own personal license with FINRA as well. And it's important to understand that all broker dealers are not created equal. Not all broker dealers raise capital, and those that do raise capital, investment banks as they're called, they don't all specialize in the same thing. Goldman Sachs does not invest or raise money for startups. That function is handled by somebody else. And a friend of mine was spent his entire life, 50 plus years in the industry, used to talk about the importance of your regional investment banks. The small regional broker dealers that, for example, we live in Atlanta, the Atlanta-based broker dealers that specialized in raising money for Atlanta-based companies, and the importance that those played traditionally in the industry. And then some broker dealers strictly have advisors who advise investors. Some broker dealers are more or less, doing mergers and acquisitions, and some simply trade for their own account. And it's important to understand who does what when you're out there trying to raise capital or put together, someone to support your company. Also, the different types of institutional investors. Who invests in what companies and what stage of their growth and their development. Those are big things that we're going to look at and get into further detail on, as well as individual investors and stock traders. Traders and investors are not the same. They have two
Yeah, yeah.
separate goals. For those guys that are short-term day traders, they like to have nothing at the end of the night, so they don't have, as we call, overnight risk. Um, and I spent a couple years in the late 90s back at Momentum Securities when day trading and scalping was a big thing back when the market was quoted in fractions. When the
Yeah.
price of a stock was quoted in fractions, in eighths and sixteenths and quarters,
I remember
and what
that.
it was
Oh,
like.
wow. Yeah, yeah, yeah.
That was back in the late 90s when that changed, and how the market has changed since then.
Yeah.
Um, and
Let,
then we've got
let's talk.
um,
Let's just pause a second because I think we're going to dig into it deeper when we get into it. But it's important to define the difference between institutional investors and individual investors in one real simple way to think about it. Institutional investors are pooled funds. It has, directors and money managers and like a team of people that are making decisions to invest out of a fund. Private equity funds, venture capital funds, hedge funds at sometimes, those kind of things, boutique funds, right? Those are ones that are investing out of funds, whereas you get individual investors that are stroking checks out of their own individual checking accounts. So where they play in the hierarchy of the stream varies on the traditional mechanisms of seed stage through to series B, C, or whatever, right? And because they have the money under management, oftentimes they have to make bigger investments versus an individual that's going to make smaller investments because it's their own money. But then all of that kind of goes all over the place when you get into your direct public offering. So I'm just going to put a pin in that. I wanted to differentiate that just a little bit for our listeners, because sometimes you get people go, I need a venture capitalist, and they're like raising 100 grand. Well, that's not a venture capital type of money. You know what I mean?
no,
So it's
no.
like you got to understand the differences. And so I'm going to let you take it back over and get into talking about um, the uh, the different types of folks when it comes to like what you do. Like to me, transfer agent, I didn't really become aware of transfer agents until like Reg A Plus, because that was one of the requirements besides SEC audited financials that you have a transfer agent. And I thought that's really interesting. That seems like a low threshold of a requirement. You don't have to go through a broker dealer. You don't have to do these other, some of these other things, but a transfer agent. So a transfer agent is a very critical part. And as I've learned in listening to you on these calls that we have every week, there's so many things that a transfer agent does when it even, private companies that have a lot of investors, family offices that have different investments and different things that they're handling. There's such, and banks and trusts and just different things. So but spend a few minutes talking about transfer agent and the role of that.
Yeah, so transfer agent is one of those behind the scenes type entities or companies that you really never know about or think about unless you need their services. But a transfer agent, the function of a transfer agent is to maintain the shareholder books and records of a corporation, help solicit proxies or do shareholder notifications, and pay dividends. So for most people who buy stock in the open market, and if they never request a physical certificate, they're never going to interact with a transfer agent because those shares are already held in street name and they stay in street name and they never leave. But if you invest directly into a company and you sign a subscription agreement and you buy shares privately, the vast majority of time it's going to be the transfer agent that actually issues the shares to you, whether they're in certificate or book entry format. And that's a good thing because transfer agents are regulated. They get audited. And so when your shares are being issued, you want somebody who understands the rules and regulations on issuing the shares and what it takes to have those shares properly transferred so that mistakes don't happen, because mistakes are costly and time consuming to fix. But the transfer agents also maintain some reporting to the over-the-counter markets where they verify certain information that is then pre-displayed online. The transfer agents also serve as advisors to their companies. They're a great source of information for company executives who don't have a lot of experience in the public markets. They know investment banks, they know attorneys, they know how things function. They know all the rules and the regulations generally around annual meetings and what you're required to do and what you can't do. Advice that keeps you out of trouble is invaluable. And there's, it's a lot easier to stay out of trouble than it is fix an accidental mistake.
Yeah, let's talk about law firms, right? Because I've seen companies make mistakes when they're raising capital, and you probably have seen it on the public side where they go to a regular attorney. It might be a business attorney or a contract attorney, and then they ask them to create, their securities documents, or to, even when it comes to, managing their IP and stuff, and they mess it up. Right. They don't, or I've had attorneys, I say, well, how'd you come up with that valuation? Well, my attorney said, based on my value of my IP, this is what my valuation should be. I'm like, well, that attorney doesn't know anything about raising capital, because a patent is not a company. A patent has no value until it's turned into something that generates revenue. I mean, it has a value. You could just sell it pure because it's like so unique. And I've had clients that have done that too, to get the money they needed to actually raise the capital for the company they want to build. But it's, for the most part, that establishing, you have to understand what your strengths of it are. And one of the IP attorneys that I do work with, I interviewed him on my podcast. He said one of the things you have to understand is that attorneys are not business advisors. They will tell you what you can or can't do according to the law, but they're not going to tell you whether it's best way to do what is legally under the law. What is the best practice for what it is you're trying to do? Because that gets into business advice, and then they feel like they're legally liable if your business doesn't succeed because you say, well, he told me to do it this way. Right. So I've seen so many mistakes where a company who doesn't know what they don't know tells an attorney they want XYZ. The attorney drafts it up, makes sure it's legally sound, and then they go off and do this, and they spend a bunch of money on a patent on something that will never go to market, or whatever, vice versa. Have you had similar experiences with attorneys when it's like on the public side of things and advising companies on their documents that they might need for, filing and listing and things like that?
Yeah, I mean, actually, we've had a wide variety of experience over the 20 plus years we've been doing this. You will find attorneys come in all shapes and sizes, and they work for law firms of all shapes and sizes. one of the things to remember is the big law firms are there for super big corporations. And the big law firms got big by looking out for themselves first and foremost. And if you're at a startup or you're a small public company that's looking to, raise capital or just maintain your public filings, you don't need to use the same law firm as IBM. And what I found is there's a lot of boutique shops where you have, attorneys that specialize in securities law that are more than adequately competent to advise you on your small public company or your capital raising process. And we're gonna get in. We're gonna talk to some of those attorneys. We're gonna meet with some of them. We're gonna get to know how they work and why they're good, and why they're better than the ones we're not really talking to. I mean, or the ones that you want to avoid. And I'll give you a good example. Some attorneys will draft whatever you tell them to draft. A really good attorney will do a little bit of research and let you know what other people in your industry are actually doing, so you can model your company and be successful upon what is already a little bit of a
Yeah.
proven technique. And I'll give you a good example on this. I'm serving as interim president of a public company in a highly specialized industry. And our securities attorney, in helping us draft our filings with the SEC, literally reviewed the filings of the largest players in the industry. There's about 30 other publicly traded companies, and we went through to see what they, with their super huge law firms, were writing in their reports to the SEC, so we could use that as a model and guide for our reports.
Yeah.
Not every attorney goes that extra mile. You would hope
Yeah.
they do, but they don't. But
Yeah.
we want to talk about that. We want to talk about the accountants that service companies, how to select a good accountant that's going to work with you. What happens when, things start not to work out with your accountant and you want to
Yeah.
change. And there
Yeah.
is a best time to change accountants, and then there's a really bad time to try and change accountants. And you want to
Yeah.
kind of fall in that window where if you got to make the change, do it when it's more ideal and not really the worst time possible.
That
Uh,
is also an area I think where it's important to have some expertise or specialization on the accountants, because somebody that does your taxes is not necessarily somebody that should be helping you with your forecast. And, a lot of times accountants use special tools and they don't necessarily weave in the business strategy of how that company is going to go to market. What is the timeline of their sales cycle? All those kind of things when it comes into the forecast. And if the company, and more than once, I've had companies come that have a forecast and I go, who did this? Oh, my accountant. And I'm like, okay, we're going to need to change this. Oh, I don't know. I can't change it. It's a fixed spreadsheet. I have to go back and then therefore pay that accountant more money to modify a thing that they didn't do right to begin with. So, and then there's also consultants, and consultants are, all over the place. But we've got what, about 10 minutes left. So we're going to come back to accountants because, oh, the other thing I want to say, it makes a difference because when, just being able to do audited financials is different. I didn't understand this, than SEC audited financials. It's a whole nother class. And not every accounting firm is authorized or licensed, whatever, to do what they call SEC audited financials. So
yeah.
we'll
So
explain that more, but that is a real aha moment. And you've told me stories of companies that ended up getting fined by the SEC that filed for a listing or Reg A plus, for example, but used the wrong accountant, and then
yeah,
they
I
got
mean,
all messed up.
there's a lot in there to talk about. I mean, to be able to audit public companies, accountants need to be members of the Public Company Accounting Oversight Board, PCAOB, and
Yeah. Okay.
and
I
uh,
didn't know that. See, I
and
learned
the
something
number of
new already.
PCAOB registered auditors is dropping, and that's an issue for public companies. We're
Yeah.
going to get into a lot of this, the importance of financial models, the financial model that should dynamically update so you can change the parameters without having to
Exactly.
call someone to
Exactly.
do that. We're gonna look at what really does impact valuations and how to kind of get a rough estimate of the value of your private company when it goes public.
Yep.
Um, there's a lot of those we're going to look at. We're going to have doing some deep dives into the over-the-counter market, the pitfalls of that. Understanding when somebody offers you money, what they're really offering you. Is an offer of 20 million in funding really an offer of 20 million, or is it
Yeah.
something less?
Yeah.
And how to look at those. We're going to take an episode and look at what a toxic financing is. and
Yeah.
how to determine those. Those are
Yeah.
topics I've previously blogged about, and we'll revisit those.
Toxic
Well,
financing. I can't wait to talk about that one.
oh,
Okay,
it's
so let's we got a few minutes here. You know, people are going like, and what are going to be the future episodes? So tell the audience what's happening starting in March, right? We're going to get into IPOs. Like, so talk about how that's going to be. We sort of outlined the framework of what's going to happen every month with a topic and hot topics and a guest interview. But give it a little teaser for what we're going to do in our next episode.
sure. We're going to take a look at the IPO market, the listing for small and medium companies. We're not going to really focus on what Goldman Sachs is doing, but if you're in the broader universe of public companies that like to get public, we're going to talk about what's impacting you and what those investment banks are seeing, the rules, the changes for listing requirements coming around, and the direct listings. NASDAQ and the American Stock Exchange have recently rolled out a bunch of new rules regarding continued listing requiremements, and those are going to have a ripple effect like nobody is prepared for. I just finished an article for Microcap Review magazine, and we're going to do a deep dive as to not just what we talked about in that article, but what Karen does on the crowdfunding and how that's going to impact everybody down to angel investors, because it's going to send a wave that we all need to know how to surf.
Like that. Now let's get to surfing. All right.
So, and then we're going to look at how do you prepare your company for an IPO? You know, what's it take to go out there and attract an investment bank, and what if you want to do that, how you get it done.
Yeah.
And then we're going to look into a couple other topics. Do you want to talk about a few more of them, Karen?
Well, so that'll be the way we're right now, the current plan, and we are going to be very responsive to our listening audience. But the current plan is that out of 4 weeks in a month, we're going to have a part one and a part two of a topic. So like an overview and then a deeper dive in certain elements based on a lot on what our audience comes back and says, yes, dig into this part, Karen. Want to know more about that part, Eric, things like that. So that in our third episode within the month, will be a deeper dive, because number two is going to be whatever the hot news is and having a conversation like that. And then we'll do spotlight interviews in the fourth week of that month. And then as we get into the future, you know, you can go to the newsletter. Again, the link is in, we've shared that on LinkedIn in the comments, as well as those that are watching live here. You know, we have a whole listing of all the topics, but we're going to get into reverse mergers. And Eric and I differ on reverse mergers. I'm not a big fan of them. He understands how they can be used in really good ways, and he's talked about how some of his clients have gone, you know, double reverse and things like that. And so I'm starting for sophisticated types of financial strategies. I can see where I'm leaning in that I can see where reverse mergers are is a useful tool. And then we'll get into SPACs, and that's going to be a whole new thing for me. The market listing, cross listings. What other things do you think we're gonna hit in the next few months, Eric?
I think that's going to cover a pretty good topic through the summer, and then I think we're gonna have plenty of rule changes to take a look at. We'll take a look at a couple occasional regulatory um, enforcement actions. There's some interesting items out there that are impacting the market. One of the biggest ones that had a huge change in capital markets that nobody saw coming was several years ago. They started changing the suspicious activity reports, SARS reports. You know, broker dealers and financial institutions are supposed to file SARS reports on funny things that they see. This
SARS is
most
not what
commonly
they
has made the
see.
news recently because the Biden family had an insane number of SARS filed on the activities of James and Hunter Biden and a couple of the wives. And that's while that's good for the press, that's not what's impacting the market today. And these ripple effects um, have actually improved the market, in my opinion, for public companies and the ability to raise capital. And we want to talk about that because this is ongoing. And this is, I think, it was a very positive unintended consequence of one particular one about 5 years ago, maybe 6 years ago at this point. And we want to understand how that impacts things going. So we can, when we see something on the future, we understand that there's some opportunities for those of us that are smart enough to figure it out.
Yeah. Yeah. All right. Well, I think that pretty much wraps us up, Erik. Really want to encourage folks to get into the flow. The newsletter will be a way for you to see what's coming and a recap of what we talked about with a link for the replay. So that's an easy way. It'll come straight to your email if you subscribe on LinkedIn. And that's over on my wall under Karen Rands. And if you want to connect with me, please do. I love to connect with people. I have a lot of common connections in the financial sector. Connect with Erik with us so you can message us with questions that you might have or topics you want to make sure that we cover. And we really want to make this interactive and useful for the marketplace to learn what they don't know.
All right, look for this episode to be posted up on Spotify. If you'd like to reach out to me, you can I can be found on the web at coralcapital.com. Mountain Share Transfer has mountainsharetransfer.com. And drop us a line and we'll do our best to help you out. And hopefully we'll see you for our future episodes.
Okay. Onwards and upwards is how I always end my shows. Onwards and upwards. So
onwards and upwards.